Today is Wednesday, January 8th, and you're looking at a daily chart of the Nasdaq, which pulled back to its 50 simple moving average today, which is okay as long as it finds support and bounces there. If it slices that 50 and falls through there, then we have other decisions to make. But a couple things about today's action is that it undercut the Friday low of 19,379. Today's low was 19,308. So this reversal and rally, it took out the Friday low. Still, did not take out the January 2nd low of 19,117. Which this is, kind of looking like a double bottom here with this, this December 20th low. This is the date that Powell spoke. And, basically we're in a trade range here. And since Powell spoke, he had the hawkish cut, and it's pretty apparent that they're not going to, lower interest rates anymore. And the market wants interest rate cuts. So it's kind of repricing, going forward without interest rate cuts. And if the economy's strong, they really don't need to cut rates, right? Because inflation's being kind of stubborn. And the economy's fine, so there's really no need to cut rates. So the market wanted the rate cuts, not going to get them. So repricing in this no rate cut situation, but just still in a trade range here, 20,204, 19.1. So it's a 1,100 point, pretty wide trade range in the Nasdaq. But this is the leading index, the only one above the 50. This is where all the growth stocks are, and so this is why I watched this one, the Nasdaq, and all it did today, yeah, undercut the low from Friday, pulled back to its 50 and held there. I guess you'd say it found support. The 50 today was 307, so it pulled back right there to 308. So almost to the penny, or almost to the right on the dot there. Okay, I want to just point out today that a lot of indecision today. This is the action today. It went positive, negative, positive, negative, positive, negative, positive, negative, positive 18 times today. So there's a lot of indecision because tomorrow's the holiday in honor of Jimmy Carter, former president. And then they reopen on Friday. But before the markets reopen on Friday, we have that jobs number, which is pretty important because of the employment number starts weakening, which is what the market wants because it wants rate cuts. It doesn't want people employed, it wants people unemployed. So it can get more rate cuts. So it's just kind of a perverse way of looking at the employment numbers. But the employment data is pretty important for the Fed because that's one of the mandates, right? Um, Inflation and employment. So anyway, that's it for the Nasdaq. I'm not going to go through the other indexes. I did want to point out the volume yesterday was, more volume than ever. I'm going to talk about that at the end of the video today. A little less volume, but still above the 50. And then the volume yesterday was record volume, but the dollar volume was lower than Monday, where we were up 243 points or 1.24%. So that's why our friend Mike Webster says, just another example of the dirty volume. Anyway, I'm not going to get into that. I'm going to get into stocks because I buy and sell and own and trade stocks. And I'm going to start with the Batman stocks, including Broadcom. Once again, kind of doing nothing here. It ramped up after earnings and now it's just flagging. And this, could be in this, holding pattern for a little while, but doing nothing wrong. It did trade below its 10 today, so that is something to consider. The 10 was at 230.70. It closed at 229.31. Big deal. Still 3.7% above the 21. So a healthy stocks, stocks above their 21. In this chop suey, topsy-turvy type of tape, that's a strong stock. So that's what I look for, stocks above the 21. Apple, every day it's just one after another analyst opining on Apple, and it just looks like it wants to pull back to its 50 here. Nothing wrong with that. The pullback will coincide with that old buy point there of 237.23, so it's almost there already. The 50 today was 230, what, 236.64. So tomorrow it'll be 237, but 238, whatever. You know, splitting hairs here. It's pulling back. After breaking out, it's pulling back to its 50 for the first time since the breakout. That's usually a gift, although, helps to be in an uptrend. In a choppy market, it's a coin flip. But there's your, yeah, 238, 237 right in there. If it pulls back there tomorrow, I would expect a bounce off the 50. That is Apple. Tesla, another, I think it was a flat day today for Tesla. Maybe up a smidge. Yeah, it's below its 21, though. It's sold off. I think it got a downgrade yesterday. The delivery numbers were underwhelming, and now it's below its 21. I don't like stocks below their 21. Yeah, 2.8% below the 21, above the 50. So maybe it'll just pull back to this fast rising 50. Um, Meta platform still doing fine. Pulling back towards that old buy point there of 602. It just seems to be married to that 600 number, below it and above it and below it, above it, it just keeps going back and forth. But like I said, with all these stocks, you got to wait till earnings. We're right on the cusp of earnings season now. Another reason for the market to be cautious ahead of these new data points from these mega cap technology stocks. Microsoft is looking sick, just down here at the 200. Once again, just got to wait for earnings with this one. If they're good, if they have a good report, it'll go up. If they have a bad report, it'll go down. So Microsoft is one of these long term, just kind of put it in your retirement account and forget about it, set it and forget it. I don't trade Microsoft at all. Too slow. All right, so I've got to go to the A stocks, Amazon. Yeah, about as flat as you can get, 2 cents. Amazon will give you 2 cents today, and it just closed right at its 21 there. You can see that if I zoom in here, you can see a little better there. 222.15, close at 222.13. So 2 cents, like I said, 2 cents worth. All right, and the last one, no, I lie, because I still have NVIDIA. Alphabet pulled back to the 10 today. That's fine. Any stock above the 10 is fine. NVIDIA, this couldn't get out of its own way today. It was started up. If I look at the 5 minute here, it looks like, some buyers after the big sell-off, buy the rumor, sell the news at the Consumer Electronics Show. Maybe some retail folks came in and wanted to buy this thing, but just flat on the session. Stands to reason ahead of the data points on Friday, the inflation data points. They don't report for a long time into February. Back below the old 140.76 buy point. And this thing is just taking its time, isn't it? All right, that's it for NVIDIA. I'm going to go through some more of the semiconductor fabless stocks, not only Broadcom and NVIDIA. I want to point out Semtech. This one looks pretty good here. Just in a trade range or forming a shelf or a flat base pattern, if you will. 70, 27, 61, 29, a defined trade range here. So if it breaks out of that range, you might want to consider this one. It's a smaller, 5.8 billion market cap semiconductor play, but it looks really healthy here. It broke out of this base, ran up, and now it's consolidating. So let's take a look at the weekly chart on Semtech. Yeah, that looks pretty good to me. On the weekly, just consolidating, maybe needs more time to consolidate, but that one looks good. ARM Holdings consolidating in the base here, undercut the 50, rallied back up. Now it's kind of going sideways like the market, like everything else. ALAB pull back to its 21 today. I know, gosh, I get people everybody wants to, call a top. We do have a double top here on ALAB. But, I got to point out one thing that I was discussing with a friend. I'm not sure if I pointed this out yesterday, but the Fidelity Contra Fund, tripled their ownership of ALAB during the last quarter. October, November, December. This data came out, or December of 2024. This data came out, I guess, earlier this week or over the weekend. I just caught on to it and I was looking at some of the stock. What you want to see is increasing fund ownership here, and we're seeing that with Columbus and Lord Abbott stayed the same, and that could be they could have gotten the stock at the IPO. Alger doubled their fund ownership, and Invesco increased their fund ownership in ALAB. I don't know. It just pulled back to the 21 today. A lot of funds in this one. It's over 400 now. Got a ton of growth. Yeah. So I think ALAB is fine here. It needs to find support once again at the 21 in balance. Just a lot of hesitation and caution ahead of this, the data points coming up here with inflation and earnings reports. All right. MRVL, another one. Yeah, broke out of a base. I think this is the day that Broadcom reported. Just pull back to the 21. It's finding support at the 21. So doing nothing wrong. We're just in a tape here that we had a long rally for a long time. And now that when we stepped on the gas, and now it's time to tap the brakes. We're not on the gas anymore, and we're just kind of coasting here. Um, and yeah, until further notice. I mean, it's a tradable range. We just have to be really flexible. And for me, as long as the Nasdaq is below the 21, I'm much more cautious. Above the 21, I'm much more aggressive. And it's well below the 21 now, as I just showed you. All right. I'm going to move on here. A couple other names, software names. AppLovin analyst report yesterday saying their gaming was slowing. I don't know, went from like 350 to 330. So that's like going from, I don't know, 35 to 33. Um, but anyway, it's below the 21, which I don't like. Palantir looks like it has a date with the 50. Another software name diving here towards its 50. Doesn't have much to go to get there. So this is not good action for some of the software leaders. Appfolio was up 1.6% today, above the 21. So, just consolidating in a base here. That's another one. Looks okay. Twilio, very strong stock, getting support at 21 consistently here, and bouncing. Pull back to the 21 bounce, pull back to the 21 bounce, and here we are again at the 21. GoDaddy is having trouble with the 200 number. I mean, it hit there a couple times, went above it, thought the coast was clear, and now it's below it. And now it's acting as resistance, and it's below its faster moving averages, 10 and the 21, which are starting to curl lower or have curled lower. All right. Spotify, another kind of software name here that's broke above its downtrend line. To me, this, looks pretty good. Here's a broke on this day above its downtrend line, but just kind of going sideways. That was Friday, I guess. Monday, Tuesday, Wednesday. Up 3.5% today. That's pretty damn good considering today's action, which was slow. All right, that's it for that group. I've got to get to the energy data center plays, GEV. Like I say, if you own NVDA and GVEV, these things are doing nothing wrong. You just kind of have to sit on them. I mean, you don't have to. You can sell it and buy them back. But this just pulled back to that old buy point of 357 today. I don't know if anybody pulled the trigger on that, was watching it. It pulled back to its 10 at 348, and the 10 was 352. So it undercut it slightly and then bounced and closed at 366. That is a hell of a bounce. So you know that there's a lot of interest here in GEV. There it is, the first, hour? Traded down to 353, was it? Yeah. And then, buyers the rest of the day, high volume close here for GEV, which is something we like. Maybe it'll bode well for Friday's action. We had news in this space today, though, because Constellation bought Calpine, which is I think it was like 30, it was a big deal. I don't want to speak out of turn. I'll have more information on Friday. I think it was like a $30 billion for Calpine, energy provider. But yeah, usually the acquirer is down, and this one is down nearly 5%. on that acquisition, undercut the 50 once again, went down to 228, and then wow, closed 57% of the daily range at 243. So not bad there, above its 21, above its 50. How about that? So yeah, undercut and rally in the same day. Very nice. That's very deceptive. CEG, I think it's a good move too to buy Calpine for them. VST is consolidating in a base. I think it just needs more time to kind of form a handle, but it's going to do what it wants to do. And it pulled back today to its what was the low? 152. Yeah, down below its 10 and then rallied and closed back above that. But you could see this nice symmetrical cup-shaped base here. And definitely this is one you should have on your watch list, keeping an eye on. Could bust out at any time. VRT looks kind of similar. I like both of these because they both did the same thing. They broke above their downtrend line. And now just consolidating in a base, like I say, it might need more time to form a handle or it might decide, just to take off. So definitely those two should be on your watch list. You can see the RS line heading north. So those energy stocks, yeah, we like data center. Deckers, I'm just going to show a couple stocks here before I go. Deckers a retail play. Like I say, retail sales numbers were strong. When these retail companies report, there's going to be some surprises on the upside for sure because they're just not getting much love. This is Deckers though, and a pullback to the 21 found support. ONON. I wanted to show the yeah all the fund managers in here. This one's got 536, added a couple. And you could see well, Willie was adding a little at Fidelity, and there's some reduction there, not much. It's keeping the same, most of them staying the same. Little reduction here for ONON, but gosh, a lot of fund managers. This is what you call wedging here. When a stock wedges, you want to see, strong stock that makes new highs, wedges back to its moving averages with, light volume here. So real low volume profile there. Made the high, pulled back in light volume, and investors will come back and buy this stock at some point. Anyway, what other retail names do we have here? Oh yeah, CAVA. This one, 110's a line in the sand with CAVA. Um, the restaurant name, that was the low from the gap day. I think it was back in late August. August 23rd, the low is 110, has not been able to undercut that since. So below 110, it's adios muchachos, but it just, hovered around 112 a couple days here. The low is 112. And yesterday it came down back down again to 111.43, but could not undercut it. Had an inside day today. I believe that was an inside day. Yeah. Anyway, another one with a lot of fund managers, growth fund managers. This one you can see the increasing funds. Last year at this time, 298 this year, 529. And you could see that they're either holding pat or, yeah, most of them are holding pat here, standing pat. Fidelity sold a little bit, but yeah, a lot of funds in this one. All right, that's it for GABA. Since we're talking food here, I got to go to Cal-Maine. Egg company reported. You never know which way these earnings reports are going to go. And yeah, had a nice move today. Closed near the low of the daily range. It was up there 112, closed at 104. Bounced off the moving average. Oh, that looks good. I always look for auxiliary plays or pen action. And this is Vital Farms in Austin, Texas base, sells eggs, butter, and all that. Double bottom base pattern. Now just kind of forming a handle here. I kind of like that one above that 40-50 level. So this is what I'm keeping an eye on. And then Instacart was up on inclusion into one of the indexes. I forget which one. S&P maybe mid cap, 11.5 billion. I think it's a mid cap 600. Anyway, um, I don't know. Maybe it's the mid cap 400, small cap 600. I don't know. And it went into a fund, and that's not it went into an index, and not a reason to buy or sell a stock. Anyway, that's it for that. One of the stronger groups right now are the oil and gas stocks with natural gas. components. I post every morning the price of gas, oil and gas, and the commodities, and natural gas. These stocks are starting to perform well. This is Antero Resources up 3.2% today. And don't ignore this strength here. I know everybody wants to be in NVIDIA and Tesla and all the strong tech names, but if these things are moving, this is the stuff that I want to own, stuff that's moving. CRK, this is a Stock Resources, made another new high today. Let's take a look at the weekly. Yeah, that's a big old base there. Comstock looks good to me, up 11% this week, 4.4% today. So don't sleep on Comstock. CTRA is another one that's just kind of in a base. Yeah. That looks like a choppy mess, but you look at the weekly here, this is a long period of consolidation. So maybe these oil and gas stocks are going to start flexing here. Just got to wait and see. This is GPOR. I mean, you can see this one wants to break out, but just keeps pulling back, pulling back. It's been up, with 4 or 5 days in a row, though, up nearly 1% today, 1.72% on the week. Um, that's Gulfport Energy, DXPE. This is an equipment play. This is not a exploration stock. Pull back to 21, found support, bounce 4.2%. Like that one. Range Resources, going back to the explorers now. Cup with handle pattern starting to break out today. Yeah, that's got to go on the ready list. Yeah, look at that. It's been how long since it's been around this $37 level since June of 2022? Hello, 2.5 years. This is time to move. It's up 4.5% this week. Range Resources pushing away from this base here. That looks pretty good. DTM, another oil and gas. This is a transportation pipeline stock, just consolidating in the base, just acknowledging a little bit of strength there while this tape is kind of yeah, okay, no. Just consolidating in a base. That one looks fine. A couple of the medical stocks, Intuitive Surgical, just pointing out strength there. This is a leader in this group. Up 2.2% today. And you can see on the weekly, just kind of marching higher as the earnings line heads north. The stock goes north. Funny how that happens. WAY, this is an IPO stock. You should talk about this one more. It's performing really well. You can see it had this IPO base and ran up, a little bit of due diligence. Now it's just in its advanced phase. Really impressive uh, software medical stock here. And yeah, kind of like this one is up 1.43% today. And then Doximity, okay, just still in that base, okay, taking its time within the base above the moving averages here. Dox looks pretty good too. All right, a couple of, I got to go to the drug names, just a couple of them. This one had a positive news this morning, positive trial. Up 58%. Thank you very much. VIR Biotechnology. Shareholders living in the penthouse tonight. Thank you very much. COLL. This one was up with volume today. We don't want to ignore moves like this. 14% with that kind of volume. Keep your eye on that one. And then Halo. Halo is one with a decent balance sheet. They have earnings, sales, and all that. Up with volume here the last couple of sessions. You can see the expected growth here for Halo, 43, 36. So have to pay attention to their earnings report, but you're looking at return on equity through the roof, cash flow. This is not one of these fly-by-night speculative biotech stocks. Anyway, 3 days in a row of this above average volume moving higher. Don't ignore that. That's like like a stage one type of base. Had that gap to fill at 53.84 and did that today. So see where it goes from here. All right. That's it for me. Thank you for watching. Except for at mcstockcharts.com, we always have one more thing in honor of the great Steve Jobs. Wanted to point out the destruction of the quantum computing stocks, which I think is healthy for the market. There's a lot of pull forward here. I'm not saying quantum computing is not going to be important, but for right now, they don't have the fundamentals to back up this kind of a move here. And so, you kind of knew that, they pump it and they dump it, and that's what's happening with these things. Eventually they'll have, some of these companies will have the sales and earnings to justify this type of move in the price here above $50, but not right now. So Jensen Huang, NVIDIA CEO, came out and said these, quantum computing's a ways away, and stock sold off today, 39%. This is why I don't like trading stocks that are, this is like a meme stock or a, one of those SPAC stocks from 2021 that were going through the roof every time they came public. But today, it's got a little bit of a haircut. I don't know. We'll see. You know, yeah, short price. I'm short covering, taking profits on these names. Rigatoni, RGTI, Rigetti Computing. Yeah, took a nice hit today. 45% move. Man, that's 45% in a day. That's ouch. That hurts. So this is why you don't, I was mentioning if you're going to trade these, don't hold them overnight. Trade them during the day, but man, don't hold them overnight because you wake up down 45%. Thank you very much. No, thank you. QBTS, another one. Yeah, 36% move. QUBT, I think this one doesn't even have software tools for quantum computers, 43% move. QMCO, this is the one that's yeah, tape drive. This is not even a quantum stock, down 30%. So yeah, having a real rough week here. 42% on the downside this week. So yeah, I mean, if you want to, think these things are going to the moon and hold them forever, you're going to get burned. So that's what happened. I think this is healthy for the overall market because these are super frothy names, and now they're coming back to earth. I just wanted to point out, I talked earlier about how the Nasdaq had this massive volume day. And people think, oh my God, all these distribution days and this is horrible. But it was all penny stocks. And a lot of I shouldn't say all, a lot of the volume was penny stocks. This was XTIA, and you can see yesterday it was up, I don't even know how many freaking shares that is. 2,668,000,000 shares. Come on, man. So yeah, they drove it up 30%, then dropped it 55%. I mean, this is a penny stock, almost like literally a nickel stock. Um, so that is what is driving this, massive volume in the Nasdaq. Um, it's not that, there's distribution in a lot of the quality names like I just showed you. It's these little, you know, I wouldn't call this a penny stock. It's a $3 stock, but it's like a penny stock. Yesterday was up on insane volume. I mean, it usually gets 1 million. You're looking at 10 million there. That's a CERO, RIME. You get the point. I mean, these things were up with volume. 672,000 shares. Normally gets 61 million. What did I say? 662 million shares. Okay. So it's like 10 times what it normally does. And anyway, that's I just want to point out this is the kind of the dirty volume scenario that Mike talks about, and I believe he's right on the money with this stuff. So, yeah, it was a distribution day on the Nasdaq, but a lot of it had to do with these penny stocks just going up like crazy. Yeah, 1.3 billion shares. Man, come on. Okay, so you think it's over with, right? That was yesterday, but nope. Come back today, we got a whole nother set of stocks, going crazy on massive volume. I mean, 5,137% above their average daily volume. This one did 24 million, normally does 460,000. So, just, I don't know, maybe a fund just decides to run these things up one day, then drive them down the next day. So I think maybe some people are just bored and doing this stuff. VRME, another $1 stock. What was the volume here? 70 million, normally two. So you get the point here. This is kind of a silly thing that's going on in the market. I don't think it's healthy. This one was up on 165 million shares. Normally does 365,000. That's Silo. And then EUNR is the last one that I'm going to get out of here. Maybe not. EONR. If I could read my own writing, that would be great. Yeah, up on, 35,000 uh percent above the average volume, 82 million shares normally does 236,000. So I'm just pointing this out to show you that when you look at the Nasdaq and you see, oh, this massive volume, record volume. Well, that's why we count dollar volume. And the dollar volume on this up day, Monday, was higher than these 2 days of selling. So it's a little tricky. And like I said, this first week or two of January is just super tricky. A lot of it has to do with taxes. But it's just, sometimes institutions will sell stocks at the end of the year, then buy them back at the beginning of the year, or they'll as soon as the new year hits, they start selling for tax purposes. You just don't know, so you just got to play it safe and just acknowledge the chop. Once again, when it was up here on Monday, good. We're up above the 21, so it's all systems go. And then Tuesday, this happened. So you got to be flexible below the 21. I'm going, tapping the brakes or slamming on the brakes. Now pull back to the 50. My expectation is here it'll find support. Friday, we get a little bit of a relief rally. I'm not saying it's going back to 20,000, but maybe, a couple hundred points. And anyway, a bounce off the 50 is what I expect. But I'm not predicting. That's my expectation. The expectation could be broken. It could trade down to the 200 here in January. You don't know. I expect caution ahead of the earnings reports. And I certainly am looking forward to the earnings reports instead of, Fed talk and, policy and all that. Monetary and fiscal policy drives me crazy. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. Have patience. You got to show some patience here. That's part of a skill, so you got to hone your patience skills. Thank you for watching.